Hi, thanks for joining us this afternoon. We have Good Natured Products back on. We originally did a webinar for them in, I believe it was the 23rd of October.
It was.
Since then, the stocks performed incredibly well. Plus, you've made a transformational acquisition, which I think was the second transformational acquisition you did last year. And you've had really great financial results. So looking forward to getting a full update there. For anyone that's new to the story, I would highly recommend that you watch the replay of that webinar because it really does go into the customers, the product lines, and the history of the company in terms of the other two acquisitions they made previous to 2020. So this one will focus mostly on recent developments. And with that sort of summary out of the way, I'd like to introduce Paul Antoniadis, who's CEO of the company. Hi, Paul. Thanks for joining us.
Hi there. How are you?
I'm good. I should also point out, I forgot to do this yesterday too, that the presentation will contain forward-looking statements and there will be a Q&A at the end as per usual. I guess I've gotten lazy after doing 100 of these or whatever. But yeah, thanks for coming back. Maybe you can give us a little bit of an overview of your past as well as a quick synopsis of the company and then just jump right into what you think is important for 2021 for Good Natured.
Yeah, well, thank you for having us back, and Happy New Year's, and good afternoon and good morning to everyone from out west. I saw the participants coming in, and I see it's exciting to see the turnout. It's tremendous. I see some familiar owners on the call, so welcome, and I also see a lot of potential owners, and so that's also excited as we're still working to get our story out to the market.
Well, let's just across the wall.
Yeah. So, just maybe for the folks that are to new story, I mean, again, as Deborah highlighted, I'm just going to touch on an overview of the company. Just 2 minutes on myself. So I'm a dual citizen of the US and Canada. My background's from the retail industry. So, pretty much grew up with Best Buy in the States and had a bunch of different roles, and last role in the U.S. business unit was Vice President of U.S. Sales Development, which was a ops and strategic role. I held that for about 4 years, and then the international business unit was started and was appointed to senior executive and did many different things there as CEO of Best Buy Brands Europe. And the reason why I'm providing that context is Good Natured its strategy and business model is really framed around a retail consumer product industry. And I love creating these North Stars. And I think it's always good with owners, our existing owners and potential owners to understand and ground ourselves to our North Star. Because I really use this as a opportunity to align our owners, align our board, align our operating teams, execution, both strategically and operationally. So our North Star has become North America's leading earth-friendly product company. And we're going to achieve that by creating a large assortment of plant-based products that consumers like yourself here on the call or business owners and operators can use as an alternative to the petroleum-based or synthetic chemical-based products that you're using today. And this one-stop shop or large plant-based assortment, internally we call product authority. And we're going to create that two ways. We're going to do it organically, where we have 100 team members at Good Natured. We have packaging engineers, product engineers, merchants, assortment planners, and they target categories that are ripe to be disrupted with plant-based products. And we make those products at the highest level of renewable material. They're free of any chemicals of concern. They have a lower CO2 footprint gate to gate, and they perform equal to or better than the petroleum-based products we're replacing. We're also doing that through acquisition, which Deborah kind of highlighted, and we're going to speak to more here in a minute, as we go out and we acquire plant-based or petroleum-based companies that have lots of products, lots of customers, they're EBITDA positive, and if the petroleum, we convert those petroleum products and customers to our plant-based materials, and then we begin to activate the cross-selling. We take the company we just acquired and take their products, and we converted them, or they're plant-based, and we cross-sell them to our customers, and we take our existing products and cross-sell them to there. And that really unlocks are what we think is an unmet need in the market, which is making it easy and affordable for our customers to switch to plant-based products. I'm just going to highlight, just a few corporate highlights, and I want to kind of set some context behind Good Natured. Where are we at our North Star? How do we end up the year in 2020? Well, we've got 385 plant-based products that are sorted across 5 different business groups. We're on pace to, we do, over 500 reoccurring B2B customers. And we're on pace to do well over 18,000 consumer direct transactions through our e-com channel. So we are a retailer, and we also have, we also assort and place our products on other online channels, but also in physical brick and mortar stores. Some key considerations for our folks on the call that are thinking about becoming an owner is, one is we're disrupting these very, very large petroleum-based markets. If you just look at packaging, it's $1 trillion. It's never had a down year. It's highly fragmented. The biggest players, I think they have like 3 to 4% market share, and they're really growing through consolidation. The other thing is our business model is working. We've had over 153% 6-year CAGR growth. Last year, we just ended 2020. We announced our preliminary announcements. We did over 16 million. Growth was between 62 to 65%. That's, really humbling on how well the teams executed during COVID. And our acquisition strategy, which Deborah highlighted, like we completed 2 acquisitions in 2020, despite the challenging environment of COVID. And we're pretty proud of that. It should demonstrate that, hey, we can continue and have executed on our acquisition strategy. I'm just going to touch on these market drivers for just due to limited time. If you look at the FMCG goods, if you see that link, you can download. You can go to investor@goodnaturedproducts.com, and you can copy that link, put it in your browser. It lists all the products. But the point here is that sustainable goods is the fastest growing categories inside physical stores and online. Consumers like yourself and your family members, businesses, they're looking for products that are safer for their families, safer for their customers, and better to the environment. Now, the way we are positioning Good Natured into that trend is we're actually assorting products online and in stores, so our customers can grow their revenues, by assorting our products. But we're also, if you look at all the plant-based foods or, safer chemical products, cleaning chemical products, they're still using petroleum packaging. So, it's a huge opportunity for us to change, if they're putting all that effort to create, like Better Bites is a great example, our recent announcement. They're a plant-based food product. It was a natural extension for them to switch to plant-based packaging. And we think any sustainable good product that's positioned in FMCG it's a natural transition to them. And that's one element that's transforming this huge packaging industry. There's also other things like regulatory mandates, ESG performance mandates from large corporation boards now are putting a lot of bonuses that are tied to incentivizing their teams to improving their packaging or improving their contribution to the environment. So Good Natured has a lot of good, strong tailwinds. I'm just going to highlight our strategy and business model, and then we'll jump into our recent financial performance and the acquisitions that were completed. So we have three proposition elements. One is the ingredients. It's the safer materials. So, people get super excited when they hear we can make products and packaging from plant-based materials that are free of petroleum, free of chemicals of concern. But if the design isn't equal to or better than, they're not going to make the switch. And we don't expect them to make the switch. So we really look at eating trends. We really look at business operational trends, consumer shopping trends. And we really design products that improve our customers' operation, either driving more sales because they're sorting on their products, or we're right-sizing packaging so they can improve their case packs, or we're right-sizing packaging so they can put more product on the shelf, or we're creating designs that create better visualization to improve sales as they're, either stacked or their food product is more visible to consumers like ourselves, because we love to impulse buy when we're shopping our grocery stores. We have 3 materials that we make our products on. This is really important because this is part of making it easy. We love giving our customers options. And I don't know about you, but I love having options when I shop. So we make products out of fiber. We have multiple fibers we use. We make sure they're free of any chemicals of concern. Sometimes it's 100% fiber. Sometimes it's fiber with a combination of biodegradable and bioplastic lids. Our bioplastics are equivalent to petroleum. These are for customers that are really focused on downstream recycling. Bioplastics can commingle with 100% petroleum products. So in other words, if you and I were recyclers, you could take our bioplastic products, you can flake it and prepare it to be reused. You can take 100% petroleum, you can flake it, make it ready to be used. You can commingle it, and you can make the exact same product. And then we have customers that are focused on compostability, and we have a full line of biodegradable options for those customers. So that flexibility is a big driver on making it easy for our customers to make a switch. And simply put, we make better everyday products from the highest level of renewable material, free of any chemicals of concern. We make sure it performs equal to or better than, and we deliver it at affordable prices that really enhances or improves the performance of businesses. And that's really important, right? Because we recognize that our customers, they're incentivized, they have bonuses, they have budgets they're responsible for. And we want to be viewed as a partner that actually enhances their overall operation while meeting their sustainable objectives, whether that's to their internal stakeholders or their customers or other their owners if they're a public company. This is the business group that Deborah kind of highlighted. I went quite extensively in the last presentation, but this just shows that the leaves is where we're harvesting value out of the market. And our packaging, we have multiple segments within each of these business groups. And examples packaging, we have food packaging, medical packaging, general merchandise. And then our general merchandise focuses on kitchen products and detoxifying the kitchen. And then our commercial supplies is like our pallet stretch wrap, and industrial is our flake and our roll stock, and services obviously aren't plant-based, they just underpin it. I think the summary message of all this is if you look at the customer segments and you look at the product groups, these are just business groups, there's departments and categories. This is what delivers consistent revenue growth, and this is what delivers stable, consistent margins. And when we look at it organically or through acquisitions, for example, the recent acquisition that I'll speak to here in a moment of Integrated Packaging Films, it fell into our industrial business group where we make industrial roll stock. So just for folks, see that bottom right picture? It's an example of an industrial product that we produce and ship out to thermoformers that press out products. Integrated Packaging Films, which we completed that acquisition on December 22nd, in 2020, falls into that group. But it's the overall mix of customer and products that protects us on the downside, like in a situation like the COVID environment, but it really unlocks the accelerated growth. So now I'm going to move into our financial performance and talk a little bit about our growth strategy, looking backwards and forward. So we have 2 ways we're driving growth. We're driving it organically, and we expect that to contribute 50% of our growth. We're also expecting our M&A acquisition strategy to deliver 50% of our overall growth. If you look at historically, we've grown between 50 to 100% year over year, or you can look at our 6-year CAGR. You can do your own analysis, and I'm not giving any guidance here other than our historical pattern is if you want to judge leadership, the best way is to look at their behaviors in their past, and we intend to continue and prioritize revenue. For folks that are on the call that are considering becoming owners, we're a growth company. The reason why we focus on growth, because growth is a way we create market cap growth by through a multiple of our sales. And so the higher our sales are, even if we maintain our current multiple, it's going to drive our share price up. The second reason why we do it is it drives, it improves our overall economics of our business model and our first to market position. So the more products we have in there, the more growth, the more products we add, the more customers we add, the more growth. It actually begins to not only does it strengthen our business model, it begins to upsize us in size, where we believe at some time, whether it's 2 years, 3 years, 5 years, who knows, we anticipate some company will acquire us and make us their green division. And then lastly, the more revenue we deliver, the more good we do to the environment, to the health of wellness. So the more products we displace, better petroleum, the healthier the planet becomes, and the more chemicals we remove from contact of humans. This is our revenue. I'm going to now talk about our recent acquisition. So this kind of reflects what I just spoke to around the business model and our prioritization of revenue. Now, when we prioritize revenue growth, we're going to do it through discipline, where we expect stable, consistent gross margins, which you can see historically we've delivered that on an annualized basis within our range of 32 to 37%. I get a lot of owners asking me, like, why do you pick 32 to 37%? Well, I do that because our margin will vary based off product mix, and it will vary based off customer mix. So if we're at like a 33, don't panic. We're probably mixing in more national accounts, or we're mixing in more food services that has a lower margin. But if you see our margins jump to 44%, it's probably we're mixing in more small business, we're mixing in more medical. That's what causes that to change. And you can look at on a context quarter over quarter over the last 4 years, you can see that stability in margin. And you can also see that consistent revenue growth. And that's what this model delivers. We've got a pretty fired up team here at Good Natured, and every year they're getting better at executing this model. And every year we're getting more data and becoming smarter around our customers and our operations. And I'm awfully proud of 2020 because despite these challenges, like if you look at Q2, I mean, the economy in the US and around the world was down, 30%, and we delivered 57%, growth. And we continued that momentum all the way through Q3 and even our preliminary quarter numbers, which were, very, very strong, doubling our revenue growth year over year in Q4. Now, I'm going to talk a little bit about our most recent acquisition that we completed on December 22nd. We acquired a company called IPF, which is Integrated Packaging Film. As I highlighted, it was part of our industrial group. We really love IPF for many different reasons. One is it's really well operated. The Mikar family has been in the sheet extrusion business. I joke about this with Bill. I say he at birth has been on a line extruding sheet, but he's been doing it since the 90s. And we love that expertise. It strengthens our technical and our capability. But at the same token, through their innovation, they have accessed markets that we're currently not selling industrial roll stock into. So an example is medical. We love the medical segment because today we're the only plant-based provider into the medical packaging segment. And we believe this is a huge opportunity for us as owners, for our owners, because a lot of these medical packaging or medical device companies are looking to hit sustainability objectives. And IPF has opened that up in the industrial side, and Shepherd has opened that up in the packaging side through this acquisition. So you can see we're quite methodical, right? We're very analytical and purposeful in our actions. And so you can see we acquired, Shepherd's in spring, and then we complemented that with IPF, which is located in Ayr, Ontario. So IPF is about an hour away from Shepherd's. We intend to have all of our roll stock to produce packaging at Shepherd's from the IPF facility. And IPF and Shepherd's are a fantastic complement to our outsource partners. So this is an and to our outsource. We look to grow our outsource channel and our in-source supply chain channel from a production perspective equally. And then I'll just want to note that IPF added $3.7 million in EBITDA. So it's, again, it fits that profile of, 100 different customers came in from IPF. It was positive EBITDA. It opened up the medical segment. It also opened up this electronic segment in the industrial side. So it's a very exciting strategic acquisition in many different aspects. And then I will now, I think I'll just kind of conclude there and turn it over to Deborah, and maybe we can spend the rest of the time. I may have gone over a little bit on my time, but let's just now maybe open it up to questions.
Yeah, sure. So I see a few questions coming in, and I have some from before, so feel free to put them in the Q&A box rather. So I know you don't really provide guidance, but I have some questions around that, so I'll let you try and dodge them.
Sure, I'll do my best to answer.
Expected quarter over quarter rather than year over year growth, or is it lumpy? I guess they're asking, like, would you give quarterly guidance, annual guidance? How do you look at it, like quarter to quarter? Or how should you look at your different quarters? Do you have seasonality, et cetera?
Yeah, so I'll start at the top, and then we'll drill down. So at a top level, if you take what we've announced, I can't give any guidance, but I can provide some backwards analytics, and then you can do your own. There's some analyst reports that you can reference. But I will start by saying, if you take our 16.4 million that we have released, and then the TTMs, which is in the public domain of IPF, which I should have highlighted when I was talking to it, is about $17 million annually. So if you add the two together, it's 33 million, right? So you can discount it and say it's 32. You can create a range and discount a bit to 32 million and say 35 million. So we've positioned 2021 by already doubling our revenues from 2020 through that acquisition. And that's all public domain. That doesn't include, any other new acquisitions. That doesn't include any other new products. That doesn't include any other net new customers. That doesn't include any cross-selling. So I'll let the imagination determine the possibility. And I would just say, look at our historical pattern. We pride ourselves on our performance. We pride ourselves on our say-do, and I want to make it really clear to the folks on here that are thinking about investing. We're a growth company, so our orientation is on our North Star is for growth. Now, question about, hey, do you provide monthly guidance or do you provide quarterly guidance? The answer is no. But I will share with you that we look at our performance by customer, by product on a weekly basis internally. We are very data orientated. We need to deploy some technology to continue to support this growth, but we look at our customers' performance, whether it's shipping, whether it's sales performance, because we're customer centric. Like we forecast our products, we make sure we have safety stock. We don't want to be out of stock. We want to have our on-time delivery, and we want to make sure they're satisfied. And in order to do that, you have to look at things on a weekly basis, and we do. And so we're very, very close to what's happening with our customers, and we're also very close on what's happening to our sales pipeline, which both our organic pipeline is very strong and our M&A pipeline is also very active.
When look,
How did I do? Is that a good
I think
dance?
no, I think that makes sense. I think you covered as much as you can without giving formal guidance. When you look at your performance by customer product, like you said, and you're looking at these acquisitions that you're doing and the cross-selling opportunities, et cetera, like, are you able to track how much of your growth is coming from those cross-selling opportunities? Like how much of your growth is coming from customers you're acquiring through these acquisitions, I guess?
Yeah, I get that question a lot from our owners, and it's a very good question. And we haven't really provided that, but we'll begin to provide some context around that. I can share with you that the model is designed for 50-50, right? Half from organic, which organically there's three levers. There's half that organic is going to come from go get a bunch of new customers. So we're always going to be out there active on our net new customers. The other is going to come from sell more to our customers, because the reason why customers choose us is that easiness. Like, we want to make it easy by giving them lots to choose from. Maybe they want to go bioplastic, maybe they want to go fiber, maybe they want to go biodegradable, maybe they want to go custom, where we can actually custom design. We want to give them that easiness so they can begin to take that first step. Once customers take that step, having one supplier, good-natured, to support their continued placement, whether it's replacing GNFR goods or sorting other products, they love that. Like, that makes it, they don't want to deal with 100 different suppliers. They don't want to go out there and try to find, legitimate plant-based products. They come to us. So I can say that we're really concentrating on that 50-50. There'll be years where, acquisitions could be 60 and organic's going to be 40. There'll be years where organic could be 70 and acquisitions are going to be 30, but we're centering on that 50-50 split. I'll also point out that the model, in order for it to work, that matrix, right, of different business groups and customers, has to have growth within all the quadrants. You can't have one quadrant, whether it's a department or a business group or category, be down. It's the collective mix that really unlocks our pricing and unlocks our growth. So we look at that quite closely. To your question, do you look at cross-selling? The answer is yes. Do we look at revenue per customer? The answer is yes. Do we want to grow our relationship with a customer? Of course we do. We love our customers, and a lot of our customers are, particularly on the small business side, are becoming owners, and they're becoming huge advocates, and they're actually bringing us customers. So there's a lot of positive things that I call leading indicators, and that behavior just shows how well the team is servicing our overall customer groups.
Okay. And we did already sort of touch on growth, but I have some more targeted questions just on your growth strategy over
Sure.
a 5-year term. Are you giving any sort of guidance on how many acquisitions you plan to do in a 2 to 5 year time frame, or what growth rates you think are sustainable over that period?
We don't. Unfortunately, I would say, look at the historical trend, mark our, we're a growth company, and then access some of the analyst reports and get some independent guidance. Now, I balance that by saying, Spencer Churchill, who's a tremendous individual, who heads up our investor relations, I like to call it ownership experience. He also supports us in the corporate development. We will, communicate, and we pride ourselves in orientating our alignment with owners. So we will, communicate as we can, but I would anchor to historical performance as a predictor to the future.
Okay. And do you have any planned acquisitions in 2021?
I would just say we have a very active acquisition funnel, and also product on the organic side, whether it's our net new customers or new products or cross-selling. So it's very active.
In 2020, you spent quite a bit of time on vertical integration. Do you feel that you're vertically integrated enough? Is there another piece missing in terms of your acquisition strategy?
Yeah, that's a great question. I'm a supply chain ops junkie, so I could talk to you probably for 2 hours on this. Our supply chain strategy is fundamental to support our business model, and we with the acquisition of IPF and Shepherd Thermoforming, which is a custom thermoformer, really dominant in the Eastern Canada, whereas IPF, 60 to 65% of their customers are US based. It's a good complement to our outsource partners because, we want to make sure that we're strengthening our supply chain. And what I mean by strengthening is, increasing capacity, or if there's a fire at a facility, or extending our competitiveness, or extending our margin, or extending our service options. I feel like we took a good step this year on the industrial and packaging side, but you got to remember we're still focusing on 60% of our business coming from outsource. Supply chains are great partners there. We have some incredible partners that in our outsource supply chain. They play a fundamental role in launching new products and growing new categories. And we are looking at extending our network, our outsource network. And we're always looking to, best position ourselves through our supply chain to be competitive with petroleum-based products, and whether it's packaging or consumer products. So our motivation in our supply chain is to make it efficient, effective, to compete and gain market share with the products that we're selling.
That's actually a perfect segue to another section of questions I have, which is around the petroleum industry. So what is the response from the incumbent packaging companies to what you're doing? Do they, or are they building their own solutions?
Yeah, there's some really great leaders and strong companies. There's lots of them in the petroleum. I'll just pick on maybe the packaging component of it. It's equal to the consumer product side. So, they're aware of it. They're very intelligent group of people. They're very savvy on trends, but they're running really large operations, right? So, a lot of them are actually turning to us as a outsource option in producing industrial roll stock for them. When they're running these large multi-billion-dollar companies, and I've walked in their shoes, $5 million, $10 million, it's a bit of a distraction, right, for them. They're looking at if you're running a $3 billion business and you got to grow at 10% for your owners, they're looking at consolidation as their method of driving growth. And if you look at, if you get a moment, or if you're a research geek like myself, you can see that the M&A activity in the packaging industry was quite strong in 2020, and they're really kind of turning to that. If they get a customer who is demanding, a plant-based option, we're finding more and more of them are turning to us because we either, they don't want to stop their lines and clean them all out, and it costs them too much money to do that for a $2 million order. They turn to us because we're cost efficient. We make a great product, whether it's a industrial product or whether it's the actual packaging itself. And we're a good outsource option to them. Now, if they choose to, jump into it full throttle, they have to overcome some hurdles, like, can it get the material? Number one is, can they access the customers? Are their customers really ready for it? So they have their own hurdles that they've got to choose to whether they want to proceed in. But for now, I'm seeing, and we're experiencing it, they're turning to us as a solution. I do hypothesize, that's why we prioritize growth. As we size up the company, again, whether it's 2 years, 3 years, whether it's 5 years from now, I believe we will be an attractive option to be acquired in creating that green division, to reinvent their company, or to create a growth division. So, until that happens, we're going to focus on our strategy and business strategy that I just outlined.
And what percentage of your customers are from incumbent packaging companies, and how has that been growing?
Well, I can't give you the overall mix. I'm just reflecting on it. I would say we've experienced some pretty significant growth in that area. Our industrial roll stock is a great option for large companies that are fully integrated. They have their own manufacturing, and so we can work with them, or they're working with a manufacturer they've worked with for 20, 30 years, and they're very loyal to them, and we respect that. Like, we're good natured and we admire that loyalty. And so if we could provide that thermoformer, the industrial roll stock to serve their customer, that's good for us as owners. Like, industrial business group is an important business group. We want all of our business groups to go, and in all of these incumbent, I think you call them incumbent multinationals that are doing business with us in this space, we are seeing, we're experiencing positive growth.
And how cost competitive are your products to traditional petroleum-based products?
Yeah, I mean, I think that's a pretty big question. So, I mean, the short answer of it is, with 385 products, we're able to offer pricing that is at petroleum-based prices. Now, as CEO, I tell my owners it's my responsibility to extract the most value out of our products. And the analogy I use is which is bottled water, which I'm not a big fan of, but if you go down the grocery aisle, you see lots of different branded bottled water, all at different prices, but you can get it for free out of your kitchen sink. So we use this assortment planning and large assortment that allows us to unlock that pricing. And obviously, pricing has not been an inhibitor to our growth, and we focus on making that affordable. I'm happy whoever asked that question, you can reach out and we can, happy to set up a call to kind of dive into the details of that. But I would just say overall that our focus on affordability is really working, and we are focused on making sure price isn't an inhibitor to making the switch.
All right. I know who asked the question, so I'll make sure I put you in touch.
Okay.
I think I've got one last question just based around petroleum products, which is, are there any products that are hard to make an alternative to the petroleum products? And how are you addressing that?
Yeah, there are. I mean, the petroleum products is a huge industry, and it's been built over, decades. And there are some categories that, we can't access today, but I have to tell you, the innovation that is happening in material science or plant-based materials is really incredible. And I expect it to continue. It kind of reminds me, of the day of landline versus mobile phones. And, people didn't, 20 years ago, couldn't really get their heads around where we are with that technology. And I expect material science to continue to enhance where we can apply plant-based materials. And so for us at Good Natured, we're agnostic to material innovation. What we want to create is a channel that has the widest assortment with the largest customer base for these plant-based innovations to come to, so we can take them to market. And we work with everyone. We work the big biorefineries. They're massive. They're super innovative. They're tremendous people. But we also work with a lot of startups, and we're pretty much well aware of everything that is occurring. And we're actually very optimistic. Like, we are, I think the best is yet to come in the material science space. And I think we're going to offer at Good Natured these options to customers, whether it's a bioplastic option, biodegradable, fiber. And so I'm super excited about it. Like, there are some really cool stuff that over the next 5 years will be available. And I think more and more of those petroleum applications we can't reach, we will over the next 3 to 5 or 7 years.
I do have some questions about product innovation, but I got one more question about petroleum, and I think it's a relevant one.
Sure.
So you mentioned earlier that that might be an eventual exit for the company to be acquired by one of those larger players. So in your mind, how big do you think you need to be in terms of revenue to be viewed as a legitimate competitor to the large incumbent petroleum-based players, where they would seek to buy you and have you be relevant, impactful to their P&L? Or do you think you become interesting to them as a brand that doesn't cannibalize their existing business and allows them to play green?
Well, I think first and foremost, it's really hard to tell, but I can give you kind of my sense of it. I think first and foremost, we've got to continue to focus on growth as a growth company and the fundamentals of delivering on the strategy I just outlined. And I won't summarize it again. That is our primary mission, and serving our customers. We do that really well, and we size up this company with whether it's 500 customer B2B customers, or 1,000 or 2,000, wherever that point comes. It's really dependent on that company. I think that question kind of framed up the answer, which is it has to be meaningful for that company to consider acquiring any company, right? They're just not going to do it. It has to have an impact to their overall business. So I don't know. It's hard for me to, kind of predict that other than it needs to be meaningful. In the meantime, we can create a lot of value through our growth and focusing on our growth rate as a multiple of sales, and, continue expanding our assortment and our customer base. So I think time will tell. In the meantime, we're heads down and, executing and demonstrating our pride through performance to our owners. And, we'll see what happens over the next kind of 2 to 3 years.
All right. Let's move on to some questions about the products and innovation. So first question is, how does the pure plant-based product, how long does it take for your plant-based products to break down?
Yeah, it really depends on the product itself. So a customer who's really focused on compostability, like there's certain states and provinces that have really good industrial compost network. There's some customers that are just really it's really important for them to have a biodegradable product or packaging. And so for those industrial compost products, in order to call it biodegradable or compostable, it has to disappear within, it's called ASTM 6400. It's a compostable standard, basically turns to dirt within 6 months. That is the standard it has to meet. So all of our products are within 6 months. Obviously, the smaller the product, the thinner the product, the faster. The larger the product, the thicker the product, the longer, but it all has to be within 6 months. Now, it's really important to note that our bioplastic line is not biodegradable. It is focused on the recycling aspect option of commingling with petroleum. And so some customers, that's more important to them. And we don't want them to turn away from taking a step forward to renewable materials because of that. So we say, hey, wait, we have an option for you. Others are really concentrated on fiber due to compostability, and they want a combination. They want 100% fiber, or they want a combination of that fiber with a biodegradable lid. I think for you, that the individual who asked that question, whether you're an owner or potential owner, it's that choice, right? It's the choice that makes it easy. Because we just want our customer or potential customer to take a step forward with us. If we can we believe everyone's good natured. So if we can give them those choices and they can take that first step, and we can demonstrate that our product performs equal to or better than, that relationship starts to really gain traction. And that trust and our servicing them and getting our products to them on time, that just begins to open up more products as a supplier to that customer. And sometimes we have customers that will just be biodegradable. We have some customers that have biodegradable, bioplastic, and fibers. So they actually use all three. And we're excited about that. We think that is fundamental to our model's success, is that authority really opens up and makes it easy and affordable for that customer to switch to plant-based products.
In talking about fibers and different inputs, is the company looking at hemp as a product to use?
Yeah, there's a lot of hemp waste that's out there. So, I can't get into specifics. I can say we are looking at it, but we don't offer anything today.
Okay. And I actually have a couple questions about water bottles, the plastic water bottles.
Sure.
Do you have a good solution, or is one of your products able to replace plastic water bottles currently?
Well, the water bottle industry, they've taken some pretty big steps to reduce the amount of material, and they've taken some steps. Do we have a solution for it? The short answer is yes. Are we in the water bottle space? The answer is no. Do we intend to go after that category? I would say, we see it, but there are other categories that we will prioritize before water bottles. I think there's a ecosystem there that's got some more broader challenges than just the material itself, but we do have a solution. We're just currently not in that market.
Okay. And then I've got some questions around single-use plastic ban. So will this be an issue for you? Are all 385 products able to pass the single-use plastic ban law coming in Canada?
Yeah, the single plastic ban is actually causing a positive impact to our overall business. Whether it's compostable forks or moving to fiber-based utensils, fiber-based, more compostable products, I believe that's really the direction that I'm sure some of you have seen, like paper straws or biodegradable straws even made from plant-based materials. I predict that will play a bigger role in the single-use plastics, or will just flat out, like, I don't know if when you have a drink, sometimes they have those stir sticks. I never understood why you got stir sticks, right? But I see those just going away irrespective of the material. It's going to have no impact to us. Like, we sell, cutlery, compostable cutlery, and that's really done well for us. And I just see more of that single use migrating to renewable options or being completely eliminated, which will have zero impact to us right now.
Yeah. Well, you look at the straws, right? Like now you get these paper straws and different things.
Yeah, it's going to drive innovation, and it's just a clear leading indicator that of our positive tailwinds that, consumers are asking for it. Policies at city level, state level, provincial level are asking for it. People are looking for solutions. They want options to address this, and Good Natured is working really hard to provide those options.
Great. Well, I have a lot of questions left, but I know we're running out of time. So maybe you could rapid fire a couple of them with me, Paul?
Okay, let's do it.
Okay. So does IPF produce plant-based packaging? And if not, does that move you away from your philosophy?
No, it produces, there are petroleum-based sheet extruder that we intend to convert to our plant-based materials. Their sheet is used at our thermoform facility, whether it's in-source at Shepherd's or outsourced, and those will be plant-based. We look to convert all petroleum-based acquisitions to our materials within 18 months. I get asked why 18 months? Because we prime the supply chain. I don't go buy, for example, IPF roughly is 14, 15 million pounds, whatever it may be. I don't have 15 million pounds of plant-based materials sitting in my warehouse. So we're now actively ramping up that supply chain to support that conversion.
Okay. And is there anything proprietary about what you do that has IP, or is it primary execution-based know-how? What are the true barriers to entry?
Barriers first to market, our product authority, our range of products, our contracts. So if you look at Flax for Life or Better Bites, they're multi-year contracts because they're custom packaging. We do have some composite IP. We do have some patented packaging designs, but we also have some supplier agreements that create those moats. So we layer in a series of moats for any potential plant-based companies that are emerging. But I will tell you, we know most of them, and we're friends with them, and so they typically there's so much blue ocean out there that we don't bump into one another that much. It's mostly the petroleum-based companies that we're displacing and competing against.
Okay. And how do you rate Vancouver as a head office location, particularly thinking about your growth and acquisition plans, geography, skills available, perception in your marketplace, et cetera?
Yeah, we really like, we think Vancouver is definitely our headquarters or our support center. We have a regional office in Ontario at the Shepherd facility, and then we have a location in the States. So we think, obviously going forward, Vancouver will remain, and I think it's a good representation of what we're trying to improve overall environmentally in health and wellness. But in today's age, the COVID has really accelerated video conferencing, so it really opens up frankly the global employment marketplace. So, you look at some of our roles, we can hire in Ontario, different parts of Ontario, different parts of the States. So we're not really restricted by boundaries anymore. It's really, depending, obviously, if you're working at the facility, you have to be at the facility. But we intend to build out our regional office network, but we'll keep our headquarters here in Vancouver.
Okay, and then talking about organic growth, what efforts are you taking to improve your current sales team? Are you open to working with independent distributors?
Yeah, that's a topical question. We are looking to place internally some new sales team members. We are and currently do work with independent reps. We create these kind of we call them pods that include internal teams, independent reps, from senior salespeople to junior salespeople that service our customers. So we do work with some distributors. There are certain customers that, again, have worked with a distributor for years, and we respect that loyalty. And then what we do is we work with that customer, but our product gets pulled through that distributor. Now, our model is a direct model, but our model is a customer-centric model too. So we work with our customers to meet their needs. And if going direct is the answer, terrific. If going through an existing distributor for them, terrific. And we do have a really good independent sales rep. I'll kind of end with that. They're very experienced, and we're very lucky to have them as part of the Good Natured team. Okay.
And there are still a lot of questions, but the one area that we haven't really touched on yet is your capital market strategy. And I have a couple of questions around there. And I would ask anyone that doesn't have their question answered, I'll send you my email address through the chat. And if you can just get in touch with me, I'll make sure that you get an answer. So first, you're currently listed on the Venture Exchange. Are you planning on uplisting or listing on other international exchanges?
Yeah, I can't, I get a lot of that questions from our U.S. owners. There's ways of accessing buying our stock on the TSXV, in the U.S. through certain brokerage platforms. You can go to our website to get some visibility to that, and it's investor@goodnaturedproducts.com. We're at this point in time, I can't say that, hey, there's a clear timeline to uplist. But when we have assessed that and have a timeline or determine that, we'll definitely communicate it. But as of right now, I can't say when or if or anything like that. I don't want to cause any speculation.
Okay, great. And your stock moved quite a bit since October. In your view, what was the catalyst for the movement? Was it financial results, the acquisitions, new contracts, increased marketing of the story, some, sector tailwinds, if you will?
Well, I think it's a little bit of everything, but if I were to put my hand on one, is we're still an unknown story, right? I mean, Adelaide and Deborah, your support and, the work that we're doing with Spencer is we're trying to get our name out there. We're trying to get our story out there as an issuer. We think we have a great story. We think we have a great business model, a lot of good historical performance. I mean, the announcement of Better Bites, that's a huge achievement and another validation to what we're doing. So I think it's more about more people are learning about us, but I still think there is a lot of folks who don't know about us. And I think that's fundamentally, again, I'm hypothesizing that's what we believe is driving it. And you're like, well, where am I coming from? Well, we know how many owners we have in the company. We're seeing our ownership growth in count increase. And that's where my perspective is coming from. And the reason why we know that is because we talk to them. We really work at our, creating our transparency with our owners, being accessible. We're here for them. Like, we're really clear that this company is our owner's company and we're stewards of their capital, and we're mindful of that. And it's our responsibility to execute and drive that revenue growth to get a multiple of sales to create the market cap. So I think it's that, but performance. Look, I always get told by Spencer I'm terrible at promoting myself. So I'm going to tell my team, like, my team killed it 2020. And if you're a potential owner, it starts with the people. We've got a really great business model, but the people side of it, they got to love our customers. They got to serve our customers. They got to be energetic. They got to be bought in. And if you look at the performance during one of the most, in my career, challenging environments like COVID-19, and it still is, right? COVID-19 isn't gone. And we're still in the heart of it. Like, it's been terrible to our business and in the communities we live in. Look what's happened. Yeah. You can assess what type of people you're backing. Like, I always tell the team, 2021, it's on. Like, we are focused on executing, and I think the people has been a big difference in getting the word out on our story. So the performance plays a big part of it too.
Well, you clearly have a very strong and defined corporate culture. I immediately got that from the first webinar, like 5 minutes in, which I think is core to building a small business into a large business, really. We're running out of time, so sure. I normally would get you to summarize, but I think I'm going to do it for you if you don't mind.
Terrific. Go ahead.
So the reasons that we really like this story is it's a legitimate company in a sector that doesn't have a lot of legitimate companies. It's a real operating business. You've shown discipline in growing it. If anyone's interested in the acquisition strategy, I would refer you back to the previous webinar because we go over that in quite a lot of detail. You've done 2 transformational acquisitions in the last year. You've vertically integrated, and all of this while focusing on profitability going forward, which I think is pretty compelling. And you've been acquiring businesses with synergies at reasonable valuations, so I think that all plays well for you going forward. And you're on trend. You certainly have a passion for changing the world in a positive way. And I think it's a really interesting time for the company.